an NMP webinar. Today we're doing a DealDesk. We are going to be focusing on innovative non-QM loan solutions from our friends over at Sprout Mortgage. Thank you for the feedback. Thank you for letting me work this, but I appreciate that. Okay, so everyone, it seems most people are able to hear me, but if you can't hear me, please message me, let me know, because I just said one person said they couldn't. So we are going to be in and out of this inside of an hour. I'm taking my phone right now, turning it to mute, turning it to silence, putting it away so I'm not bothered. If you could just do the same for us, because we'll be a steward of your time. The way this is going to roll is, we've got already a handful of questions that have already been sent to us in advance, and we thank you for sending us those questions. If you'd like, use that question box on the right-hand side to ask your future questions. Let us know actually what other questions that you might have, and just to make sure this thing is working okay, please use that question box. I want to know where you're connecting from. So please actually tell us where you're connecting from. Use that question box on the right-hand side and let us know actually what city and state you're connecting from. And let's see, actually, we already got a handful of people that are already joining us. So use that question box and let's see. All right. We got people coming in from St. Michael's, Maryland. Let's see. We've got people from Chandler, Arizona, Tampa, Florida. All right. Where else we got? All right. We got people from LA, people coming in from Orange County, people coming in from Dallas, and Evanston, Illinois, Bend, Oregon. Very cool. Very cool. All right. Listen. Thank you everyone for participating. I don't even know how to pronounce that. Waxahachie, Texas. Sorry, Beverly. I'm sorry. I just butchered the name of your town. So with us today, I'm really, really excited. I've got actually Leslie Nguyen, who's the senior corporate trainer, and Sam Bajet, who is the senior vice president. Guys, thank you so much for joining us today.
Great to be here. Thank you. Thanks for having us.
Fantastic. So I'm going to turn the deck over to you guys. So hold on for just 1 second as I change the presenter to you, Leslie. All right, okay, here we come. In 3, 2, 1, and there you go.
Okay. All right.
Fantastic.
Everyone can see my screen now. Let's just make sure. Okay, perfect. All right. Alrighty. The floor is yours, Sammy.
Well, thanks everybody for taking time out today. We'll try to make the most of your time. We know everyone's busy, record volumes in the mortgage business. We appreciate you taking time to learn about Sprout, learn about non-QM, learn about ways to do business alternative documentation. So next slide, Les.
Oh, sorry.
No problem. Oh, okay. So there's your speakers today. Obviously, Leslie's right there, and I'm the other guy. So there you go. Just to kind of set the table, what we're gonna listen to today, what you're gonna learn. We're talking a little bit about Sprout Mortgage, the loan programs that we offer. We'll get into some loan scenarios, so actually some meat and potatoes of what non-QM is about. And we'll talk about how to partner with Sprout. Just some high level on Sprout Mortgage. We are a nationwide non-QM lender. We operate in 48 states for wholesale, 50 states for our correspondent division. Right now, we're just in wholesale. We don't have New York and Massachusetts. As far as our corporate structure, our capital markets and operations team, East Coast, is in East Meadow, New York. So for those of you familiar with Long Island, not too far there from the Uniondale area. As far as West Coast, we're in Orange County. So those of you familiar with Irvine, we're down near the Spectrum. And then we do have another compliance and disclosure group in the Dallas-Fort Worth market in Irving, Texas.
Hey, just I want to add something. I I got to say, actually, I remember actually when Sprout first came out, because you guys were one of the first lenders to come out with non-QM products. And it was such a fresh thing to finally see innovative products come to a marketplace that had just bland Fannie Mae, Freddie Mac, and government loans. And you guys were, really such innovators and continue to be innovators in products. And it's been a great thing, actually, for to have access to those programs. I know a lot of brokers around the country are very appreciative of it.
Yeah, we funded over $5 billion of non-QM in the past 5 years, and just keeps growing.
Fantastic.
Next, first this. So first of all, thank you to the folks who sent in questions. We had I think 12 or 13 questions come in this week. We'll address those later in the presentation. I would encourage anyone that has scenarios or non-QM type of loans you want to talk about, please enter those into the chat. We'll get those answered for you as much as we can today. Everybody that gets a question addressed will receive some swag from Sprout, and then we will draw a grand prize winner, which will be a $100 Amazon gift card. So we do have things like this wonderful dongle there that's an adapter for charging phones. We are not giving away the laptop, but we do have many of those charger accessories available, as well as some other Sprout swag. So again, we encourage you to be active in entering questions, and we will address them, and someone will win a $100 Amazon gift card. Next slide. There we go. Okay, so real high level, this is kind of what we're going to look at today, and Leslie's going to dive into it in a little bit. We'll talk about our bank statement programs. We have 12 and 24-month options. We also have a 1099 income option. We have 2 full doc programs we'll talk about. One will be our Premier Jumbo. So that's kind of like the A-paper, old school jumbo, bank jumbo, I guess some people call it. That goes up to $3 million. It's 2-year income. We have our full doc program with the 1-year income on the non-QM side. We have our asset depletion program, which takes liquid assets that you have in investment accounts, and we're able to qualify for income on that. Another growing segment, the investor debt service coverage product. We'll go into that in a little more detail. That's from our investor series. And then foreign nationals. So we specialize in second homes and investment properties for foreign nationals, and we'll go into that a little bit here later on. So again, that's a very high level. From here, I'd like to pass it over to Leslie. She'll kind of dive in and go into a little more detail, and then we'll get to some of those scenarios that you sent in. So thank you very much. And Leslie, please take it over.
Great. Thank you, Sam. All right, folks, so we'll just get a high level to get you acquainted with our programs. First one up is our bank statement program, product code A10. This does allow the borrower to take advantage of either 12 or 24 months of bank statements. What we'll do is calculate the cash flow for them, and our team will actually take the onus of that so that we can maximize the income. Great news is there's no P&L required. It's available in all 3 occupancy types, and minimum credit score to even be considered is a 660. We do work with a max DTI of 50%. This does allow for purchase rate and term and cash out. And with the purchase transaction, you can go as high as 85%. Starting loan amounts at $100,000, going up as high as $4 million. And what's also a great feature is that blended income is allowable. What does that mean? It could be one person is self-employed and the other person is W-2. We can bring those 2 sources of income together to qualify. So here's a scenario that maybe it will help kind of put everything into play. So the purpose of using the bank statement loan is, again, to maximize the cash flow, because of course on the tax returns, more than likely a self-employed borrower is going to show a very skinny amount of income due to all of their write-offs. So what we would be looking for is, depending what the LTV is and also what their credit scores are, we'll ask between 12 months or 24 months. We'll probably start off with the 12 and look at it. But our team is here to provide that guidance. You would just need to give us 48 hours, that's 2 business days. We'll calculate the income, as we do have multiple calculation methods. So it's not a one-size-fits-all for all self-employed borrowers. So folks are really happy with this program because of the fact that we do allow for multiple accounts and also a customized way of calculating the income based on the borrower's profession. Pivoting into our full doc options, there's two. The E1 Premier Jumbo, like Sam had mentioned, it is a more, a paper type of jumbo loan. The program is available as a 30-year fix. It is open to all 3 occupancies. The main requirement here is that the starting loan amount would have to be $1 greater than whatever the conforming loan limits are in that area, up to $3 million. So that is the requirement. What's nice though is that the borrower can take advantage of very competitive rates, even we're talking about high 2 range, and not be subject to all of the strict jumbo requirements that is required from a traditional jumbo offering. 660 is the minimum FICO score, going as high as 90% loan to value. We're working with no more than a 43% DTI ratio. And what's nice is that if the borrower does go above 80, there is no mortgage insurance. If that borrower cannot fit into that tight DTI range, they want more variety in regards to terms of the loan, we do have our J10 Select Jumbo Full Doc. This is the true non-QM full doc program, much more flexible, allowing for just 1 year's worth of income documentation to qualify. That's for non-variable income, like a W-2 person. If that person is commission paid, then we do ask for 2 years. Starting loan amount, there isn't that requirement of being $1 over in the J10 program. It is simply start at 100,000, going as high as 4 million. And that program does go up to 85% loan to value with no mortgage insurance premiums added as well. And it's also foreign national friendly. So a scenario where the E1 would make most sense. So let's say this borrower identified a property and they are here in the Los Angeles area, and which here the conforming loan limits is at 510,400. The subject property is valued at 875. So in that in-between lane, right? We're above the conforming limits, but not necessarily jumbo. The E1 could be a good matchup, especially because they are a W-2 employee with pay stubs, has strong credit, low DTI, and wants that competitive rate. So this would be a good matchup for them. In the J10 non-QM full doc, the scenario could be a borrower currently has 4.5 years seasoning from a recent foreclosure. They don't want to wait 2.5 more years to go with a Fannie product. And they have 30% to put down. They've rebuilt their credit from the foreclosure and they're at a 745. The subject property is almost 2 million, 1.995, and the borrower can prove their income using W-2s and pay stubs. They do have that strong credit. They do have a low DTI and want the competitive rate. So that J10 program could be a good matchup because we only require 4 years of seasoning from a recent credit event. For those of your borrowers that have 2 years or more, that is also allowable. It's just we will require a reduction of LTV. So this does give a good, especially with a loan and purchase price of 1.9, to have a offering that doesn't require a long seasoning from foreclosure is a great matchup. Moving into our asset depletion program, A11, this allows a borrower to use their asset portfolio as a source of income without having to draw on the funds. Yes, let me repeat that. The borrower does not have to draw on their funds, especially if it's like a retirement account. We'll use what is an existing balance that shows on the statement, and they don't have to draw on it. So what are the requirements? We do ask that the assets, it could be a combination of assets or one account, however that is, be greater than the desired loan amount. At minimum, to be considered, it has to be 10% more than what they wish to borrow. We'll take that total asset portfolio, we'll divide it by 60 months to give a figure. The term of the loan is not that aggressive. You can elect for a 30-year fix. It's just an aggressive calculation we use. We'll give the borrower 100% credit of all asset accounts. We're working with a DTI of 50%. Max LTV on this loan is 80%. Starting loan amount is $100,000 going to $4 million. And you'll see there's a lot of flexibility with what we do allow as far as funds are concerned. Can be from stocks, bonds, and or retirement, and they can get credit of 100%. We will not deduct any percentage for taxes or penalty. So just to put the scenario more in focus, in this scenario here, the borrower currently has a Voya account of $650,000. They're looking to borrow $400,000. So 650 is greater than 400, so we can use just this Voya account. What we'll do is divide that 650 here by 60 months. That gives us $10,833. We'll use that towards their debt ratio. If it works inside of 50%, we will only use this figure and qualify the loan on this. If this isn't enough, then it will be used as a supplemental source to whatever other source of income they have, W-2, Social Security, pension, whatever the case may be that they can prove by full documentation. We'll add that plus the 10.8, and then now you have more income to qualify. Lastly is our investor program, our debt service coverage, product code I-10. What's great about this program is that we are allowing a borrower to qualify on this property based on the fact that the income of the property generated is going to be the defining method for income. So borrower doesn't have to use the personal income to qualify. Can the rent cover the mortgage payment? And if so, if the answer is yes, are the rents greater than the mortgage payment by 15%? If that's a yes as well, congratulations, Mr. Borrower, you're qualified. Of course, we do need that minimum FICO score of 680 and all the other requirements, but as you can see here, we're judging the requirement of qualifying purely based on can the rent sustain the mortgage. So what's great about this program is that it is available on 1 to 4 units and condos. It is not allowing non-warrantable condos. Available on all terms, 15, 30, ARMs, interest only even. So in the case that they perhaps chose a principal and interest ARM and the rent cannot cover it, they can flip to an interest only payment so that they will qualify, and we're going to qualify them purely on the interest only note payment. So that makes it easier for them. Borrower doesn't have to have any previous landlord history. It is meant only for rental properties and for business use intent. Because it is a rental property, all Sprout loans that are rental occupancy does have a 3-year prepay requirement. This loan is considered non-TRID, so it does shorten the timeline and you can get the financing done on this in less time. No LE timeline or CD timeline. So here in this scenario, we have a borrower who is part of an LLC, and the subject property that they want to take cash out on is in the LLC. So we do ask that one member of the LLC has to be a guarantor on the loan and take a personal guarantee on the loan. So 1 out of 4, so one borrower in the group is deciding they want to pull cash out on the property. They also own 25 other properties in existence that they own. So they're looking for a loan where it's not a lot of paperwork. They don't want to furnish their personal income to qualify. Can we do something using just the rents of the property? So this is a perfect matchup. The I-10 debt service coverage, like I mentioned earlier, is going to see if the property can generate enough rent to cover the mortgage payment and some. And if so, that is how they will qualify. And in this case, the property can stay with an LLC title vesting and still transact that way. And so there's a lot of flexibilities with regards to that. Turn it over to you, Sam. Are we stopping at this point for questions, or we'll wait until the end?
I think we'll wait.
Yeah, we're gonna wait to. Yeah, we got a handful of questions already come in. Please, remember, everyone who asks a question is getting a piece of Schweg, that little dongle adapter. So anyone who's asking questions is going to get one of those. And of course, a nice gift card going out to the best questions. So keep queuing those questions up. We've got a handful of questions already received. You guys continue away.
Yeah, I think I froze up here, so hang on, see if I can get my webcam going. Love technology.
Oh, now it's just solo.
Yeah. Let's see if this works, then if not, I can just go audio here.
Yeah, and if you want, Sam, we could use my face, and I could just mouth it like lip sync.
Is that what you want to do?
Yeah.
All right, you can hear me fine, right?
Yes.
Yeah, perfect.
Okay. So let's just run through this for the sake of everybody's time. So let's talk about some of the tools that Sprout has to make things easier for non-QM. You know, there's kind of a misconception that non-QM loans are really hard and there's not resources out there to help loan originators bring those loans in, size them up accordingly, and get them, into underwriting. So one thing that we've reinvested through the years is into our technology. We've developed a proprietary product and pricing tool. It's called iQualify. This will allow you to size up your loan scenario prior to submitting it. So you can get an idea what loan programs it qualifies for, what the pricing looks like. You can toggle between borrower paid or lender paid. You can toggle between different coupons, for different rates to see what the rebates are. So it's really robust, and it incorporates all of our non-QM loan programs. So that's something that you can reach out to your current account executive, or if you're not approved, we'll share some information at the end on how to get you access to that. So that's one thing I think that's really important is to give you that transparency at the beginning of the transaction to find out, instead of sending a paper rate sheet and say, hey, look, let's see if it fits. We have this tool right at your fingertips. So other things that we've done, Leslie, if you want to go to the next slide. Other resources. So we have a Sprout marketing store that's available to all of our approved brokers and correspondents. What we've done here is we've created this marketplace, this portal, for you to leverage our marketing team, right? So not a lot of mortgage brokers have 8, 10, 15 people in design and marketing. We've made this tool available to you. You can white label our flyers, so they're forward facing to your borrowers or to your referral partners, such as realtors. You can use these in presentations, virtually. One day when we get back to face-to-face, office visits, this is also something that you can leverage. You can print these out, on your own. Or right now, you can print them out, or excuse me, PDF, electronically and email them. We also provide in-office, in-branch training. Again, pre-COVID, very common, where we deploy our training resources out into your marketplace. We could do road shows with your loan officers, with realtors. Now we're doing them all virtually. I think it's something that really not enough people are taking advantage of. From the ones that are using it, I hear rave reviews. We'll do. You can use our technology. You can use our collateral with your names on it, and then we can present to your realtor partners on our investor products or on our jumbo products. So it's something that if you're not using it now, definitely a resource that you want to take a look at.
Hey, Sam, just someone actually just popped in with a question related to the marketing center, because you guys have some great resources related to that. Do you do any kind of social media tools? Is any kind of images, anything social media related?
Well, what you can do is if you customize these flyers, again, it wouldn't have the Sprout logo. You could put your logo, you could put your information, your picture, and then you could basically transpose those onto a JPEG or a PDF and post those on LinkedIn or Facebook or whatever. Obviously I would recommend to make sure you have the right disclosures on there, that you're compliant with everything. But we make them pretty general, but like I said, it's a pretty robust offering in the marketing store.
Fantastic. Wonderful. So we have got a bunch of questions queued up. I'm going to take over control of the presentation again, so we can start looking at some of the questions that people have already actually submitted before. So let's see, show this window. All right, everyone sees my window now. All right, first question. Here we go. Let's get this reduced down. Okay, so 1099 income, rate and term refi, loan is with a private lender, not on credit report. Single family residential, owner occupied, valued at 667 for the appraisal. What do you say, guys?
I said that sounds like it could be a good matchup with our A10 program. We do need to know what the borrower's FICO score is and some other factors, but the fact that they are a 1099 employee, we can either go with just them providing the 1099 or, if that's not, max, if we're somewhat shortchanging the income based on that calculation, then that borrower can even go provide 12 to 24 months bank statements, and we can qualify them that way. So,
fantastic.
All
right,
A10 would be a good matchup.
Perfect. So, do you lend on finance? Do you lend to finance single-family residential used for home care business? No structural modifications, and licensed by state and county and city.
This one, I think we would have to look at it a little closer. It sounds like it could be, but it all depends on if there's any markings or mentioning that it is a home care business. I think that one, we definitely, nothing's a no until we look at it. So if the loan officer is willing to put the work in and provide us a full package, we could take a look at it and definitely consider it. So that one will heavily be dependent on the appraisal, but yeah. They can discuss it further before we have to get to that stage.
So one of the things I've learned about Seams with Sprout, like the best thing you can do if you're almost there with a deal, talk to the account executive. You guys are looking for ways to say yes, not looking for ways to turn down no's. So if it sounds like the best thing you could do is just reach out to a Sprout account executive to kind of get a definitive a yay or nay.
Exactly.
All right. So this borrower, self-employed borrower, 714 FICO, 38 DTI, 64% LTV, needs cash out for $548,000, netting approximately $100,000.
That's a really good scenario, and that too would be an A10 matchup because that's our bank statement offering.
Leslie, do you want to comment?
I'm sorry.
Good. So do you want to comment on our cash out limits as far as what we do for all of our non-QM programs?
Yeah, what's really a great feature, it's so hard to share all of it. So, but with our cash out transactions, we don't cap the transaction with a specific dollar amount. Like it's not like max cash in hand is $500,000. As long as the borrower stays within their LTV parameters of a cash out requirement, then let's just say they own the property free and clear at 70%, that equates to $1 million after closing costs and prepaids and stuff. Whatever the balance is, $995 or let's just say $990. Is the net of it, they would get that cash in hand. So in this case, the $548,000 that this borrower needs, a very specific number. If it sits inside of the parameters of the LTV, then it should work. Which is at 64% should be good.
Andrew, one thing I wanted to share, what we've seen kind of this, I don't want to call it post-COVID because obviously we're still in a pandemic, but post-quarantine time frame is I've had a lot of people come to me with free and clear homes that are worth $2, $3, $4 million, and they want to borrow like 50% LTV. Like give me a $2 million loan on a $4 million house, $2 million cash out, right? Not a lot of people do those loans, but what we're seeing are entrepreneurs, successful business people using that money now to go buy other businesses or reinvest in their business or broaden their business, where before they couldn't get access to that capital because it was tied up in their homes, either if they're owner occupied or second homes or investment properties. All those we have unlimited cash out.
Fantastic. All right, next question. Primary residence purchase, 660 score, has 24 months bank statements with substantive reserves?
For that would be our match up to our A10 program. At 660, the borrower is limited to between 70 to 75% loan to value max, and a loan amount no greater than 1.5 million. That's with a 660 score. So the higher the score, the higher the LTV and larger loan amount size.
Fantastic. All right, next question. No, before myself stop farting, really, guys. Sorry, guys.
They have questions too.
Yeah, they certainly do. They're as excited about non-QM as I am. Self-employed receives draw from business. Net income on personal return shows only $40,000. Can we use draw income?
Yes, I would actually probably recommend with this scenario that the borrower would also furnish their bank statements 12 or 24 months. And depending on how much cash flow the business is generating, then we can add that plus the draw on their business. It will just, that would seem like a better route to go in order to get them the max DTI ratios to qualify.
Okay, fantastic.
40,000 a year from the tax returns doesn't seem like it's all that, it doesn't equate to that much, right? So we need more funds than that.
Yeah. All right, let's see what we got here next. We got stated for cash out primary at 40% LTV.
I'm assuming that means they want to know if they can go stated and want to do a cash out. We don't offer stated on primary residence. The closest thing to stated would be that debt service coverage on the rental property. But primary, you're going to have to show some sort of documentation, either full doc, bank statements, or asset depletion.
Okay, fantastic. Next question. Low income showing on tax returns with a 1099.
Again, the 1099 document solely and some additional documents to support that, or 12 to 24 months bank statements. It would be ideal for this person. They do need to have, of course, the qualifying credit scores and all the other criteria, but document-wise, that's what we'd be looking for.
Fantastic. Next question, self-employed investment property purchase via bank statement versus full doc. Maybe kind of compare the two.
I would actually say, depending on, do they want to do this? What's the intent of the rental property? Is it for purely business use? And what we mean by that is, if the borrower has an investment property and they're taking cash out on it, what is the cash used for? If it's used to reinvest in their business, we look at that as a business purpose loan. If they are looking to take cash out for personal use to pay off their own personal debt, pay for their daughter or son's wedding, then that is looked at as personal use. So if it is business related, maybe we just cut past and all the income documents and just go straight to our I-10 program, faster turn time, and a lot easier to qualify. But if it doesn't work, then we can look at going bank statements or full doc. Always full doc is going to yield the best rates because you're proving your income by full documentation. So it depends on that borrower. Are they rate focused or time focused? And we can make a recommendation based on that. So, but if you were to compare the three, debt service coverage versus the other two, anytime you're showing documents to qualify the income, that rate is going to be a better rate than for ease or convenience. So keeping that in mind.
Fantastic. All right, next question. Next question. All right, here we go. Self-employed purchase 1.2 million, 65% LTV.
A10 would be the matchup. We just would need to know where the FICO score is, and of course DTI for qualification purpose. But it has the starting elements that would match up to our A10 bank statement program.
Wonderful. Fantastic. All right, next question. Client had a bankruptcy back in 2010, had an equity line of credit that was reaffirmed. However, the client was never notified by the lender.
Okay. So the fact that they had a bankruptcy 10 plus years ago, that definitely meets a seizing time frame. So we're good on that. An equity line of credit that's been reaffirmed. I'm assuming that means that it's like reinstated. We would just need to see the 12-month mortgage history on it. If there hasn't been any late, then that's golden. So it sounds like it has the elements of a loan for us, but I guess it also depends on, how are they paid to know which program is going to best fit, and then all the other criteria as well.
Fantastic. All right, next question. Minimum score for a 12-month bank statement.
The minimum score is a 660.
660.
And at 660, they're going to be limited on LTV and also on loan amount. So keep that in mind.
Okay. What's LTV limit on that?
Generally, it's going to hover between 65 to 70 as the max to offset the lower credit. Yeah. The sweet spot is for us, for any borrower with a Sprout product, is 680 and higher. That's where you're going to be like clicking on all cylinders. Rate wise,
660 purchase will get you to 75 on a purchase.
All right, fantastic. Next question. We're going to go to some of the live questions that people ask. So keep them coming in. We got a handful already that we're going to start. Okay, so can you combine asset depletion with other programs? Good question, Tom.
At the current time, no. The asset depletion program is solely asset depletion. So we would be qualifying that borrower using the assets as either a primary source of income or supplemental. And if it is supplemental, then it will be full doc. But if the borrower is, say, self-employed, has a huge asset portfolio, those assets will be looked at to satisfy the reserve requirements, but will not be considered as income.
Okay, and this actually might have been related to that. A full doc W-2 borrower wants a higher loan amount.
They have a lot of choices with us, so it all comes down to are they rate sensitive and what's their DTI. I would probably say those two factors would then determine would it be the E1 or the J10. So the DTI is north of 43%, J10. If it's under 43, E1, and you'll get a better rate because it's there to facilitate for that kind of prime borrower. Think of it that way.
Fantastic. All right. Can you do interest only on investor products?
Yes.
Yes.
Yeah. Fantastic. For DCS, the amount to cover the rent has to be equal or better than PI only, right? Not PITI, right?
The rent cannot be equal to, it has to be greater. So it has to be 15% greater than the new proposed payment. And that is the new proposed P&I, correct? Or I only, if it's an interest only.
Wonderful. Do you guys offer ITIN loans? ITIN loans? Thanks for that question, Tony.
ITIN loans is only going to be available to those that are here legally. So they would have to have the proper work permits allowing them. If they are here illegally and have an ITIN number, they are not, they will not qualify for a loan with us. And then so I'm thinking Tony's asking based upon the foreign national. For a foreign national to be considered a foreign national, they have to be living in another country as their home country. So documents, everything would be pointing to, let's say I live in Canada, and that, you know, like my bank statements, any document I furnish to you is most likely going to show Canada. And I'm wanting to buy a property now in the United States as a rental or as a second home. It's the U.S. property will not be my primary property. So a lot of times for these ITIN folks, they've been here for, you know, 10, 15 years. The United States is their home. You know, all their documents will show that. And so they would not qualify as a foreign national. So if they're, if that individual is interested in learning more, we do have a full segment on foreign national that we can get them up to speed on.
Fantastic. All right, and Tony, we're going to show actually everyone's, as a matter of fact, if you want, there you go. We're going to keep that up there. So everyone write down the phone number, shoot an email. So if you have any questions that maybe you're a little too shy to ask live, please hit up actually the sales address down there. Jabel asked actually if you guys help calculating income on account statements program, on the bank statements program.
We actually prefer to do it for the loan officer, and the reason being is that those numbers are recognized in underwriting. And underwriters are going to cross-check and make sure that the analyst did it correctly up front, but left hand is speaking to right hand. And so, plus we have multiple methodologies, multiple you know, ways of approaching the income. So we do prefer that we take care of it for you. So all you have to do is, you know, collect from your borrower between 12 and 24 months worth of statements all months. And then also there is a form that just helps the analyst out, you know, knowing what type of business it is. Is there any, what's their percentage of ownership? Do they have other accounts that they carry that pertain to the business? And the reason for those questions is the type of business will then determine the calculation method. The ownership percentage is important because once we get to the final figures, if they are only 50% owner of the business, of course, we now have to cut that number in half to equate to their portion, right? And then the multiple bank accounts is because if the account that they've selected doesn't generate enough income, the analyst can say, well, based on this account, it's not enough, but I do see here they do have other accounts. Are they willing to provide that so we can see if we can make that work? So there is a form that we will share, or I guess we'll work the logistics out, but you know, bank statements, the form, and then give us, and then also a 1003 is extremely helpful. You can put TBD in the subject property or something to avoid, you know, the rest of the timeline, and then a credit report. So those 4 details will get us to generate the calculation and return the results to you within 48 hours or 2 business days.
All right, fantastic. Next question, we got a scenario coming in from Oscar. Cash out refi, 690 FICO. Income is low at $3,700 a month. Debt is about $285,000. Looking for $350,000. Do you have a program for this scenario?
690 FICO, you said? Is that right?
Yep, 690 FICO.
I think they gave us the total debt amount, or instead of a percentage.
I'm trying to see here what looking for 6. Like I don't know what it doesn't say what the total, what the property is. So we don't have LTV or property. Oscar, if you're around, give a little clarity on that. Please hit us up in the question box. We'll come back to you. And let me just flag this one. Okay. All right. Next question. Oh, and there it is. And 60% LTV.
60% LTV, 690 FICO. Income is only 30 in the 3,000 range. Is that right?
3,700. 3,700. Sorry about that.
3,700.
That's gonna be
they
tough
want
on
to
the
take a
front,
cash
yeah.
out.
Yep, cash out 690 score.
I'd say it's possible. The income seems to be pretty tight. It all depends on how much other debts that they carry. If the mortgage is the only piece, you know, then the next question is, how is this borrower paid? Would we have to go full doc, or could we go bank statement? And if we can, because we're self-employed, maybe that 3,700 would actually be more. So it has the you know, kind of the beginning of potentially something, but there's still quite a few pieces that are missing for us to say exact.
All right, fantastic. All right, Oscar, put that email address right there for you. Next question. Do you require appraisals on all loans or any waivers?
Pam, do you want to take that one?
Yeah, so as far as the non-QM products, we require full appraisals, interior inspections. If the loan is over 1.5 million, we'll require 2 full appraisals. We do have an agency product, which we didn't present today because this is non-QM. That's the only product you might get a appraisal waiver for, you know, like a, you know, Fannie Mae type product. But on the non-QM side, full appraisal with interior.
Fantastic. And let's see, next question. Is current employment required for bank statement program?
Current employment required for a bank statement program. Yes, the business does need to be generating positive income. If it's a business that's been affected by COVID, and it's caused them to not be able to generate any income in these more recent months, then it's best for that individual to, you know, get back in the business, have a full month of income currently in order to initiate the application. So we are going to look over the entire span of the history of that borrower between a year to 2, but we need to know that they are currently generating income so that they will be able to afford the mortgage.
Wonderful. If someone's going to do several DSCR loans on their rental properties, do they have to fill out multiple 1003s and have multiple credit pulls?
Yes, because each, there's not a blanket loan. It is, each property will have its own loan number. We do limit the number of loans that the borrower can take with Sprout. 6 loans or 6 properties can be financed, or 5 million, whichever comes first. If they do need financing more than that, we may consider it by way of exception, but in our seller's guide, 6 loans total with Sprout, or the balance of 5 million total, whichever comes first.
Got it. All right. And next question: if a borrower is self-employed, had a forbearance for several months due to COVID, as business was mandated shut down, can they still refi?
No, not with the non-QM products.
No, non-QM. Okay, fantastic. Well, not fantastic for them, but you know. All right.
Sorry for them.
Sorry, Gloria. Yeah. Next question. Because every non-QM scenario is different, do you have a resource for a specific scenario. Sounds like that email would be a good place to start, but I don't know if you guys want to make any commentary on that.
Yes, we do have a loan scenario desk that can take in those, those types of loans, and they might say, hey, we need 12 months bank statements, we need 24 months bank statements. But if you email the sales at Sprout Mortgage, we can get more information on how to submit those and where to send them.
Fantastic. All right. Next question, and this is actually the last question. So if anyone has any other questions, speak now or forever hold your peace. Refi on foreign national without a social security number.
Refi without a social security number?
Yeah, on a foreign national without a social security number.
Oh, okay, yes. So foreign national borrower, we understand they may not have a social security number. We do have a specific format that we ask the loan officer or broker to still run credit on them to see if there's any U.S. debt. If they don't have any credit in the U.S., they actually get to qualify immediately, based on, the other criteria. If they have been working on credit in the U.S., maybe just starting out to build the credit, maybe they are currently at a 500, then somebody who's a foreign national would then need to work their way up to getting to the minimum FICO score of that specific program in order to initiate the application. So we just ask the broker to go through the motions, understanding that they don't have social security numbers. So we give you a specific number sequence to use.
Fantastic, wonderful.
And just to clarify, that's second home and investment property only.
Cool. And well, that's about it, actually. So that concludes all. Oh, hold on, one more just popped up. On foreign investor loans, are there countries that you do not deal with?
Yes.
Yeah, there is Sam, go ahead. I'm sorry.
Go ahead, Leslie.
I don't want to. There is we follow the OFAC list, and so definitely, those are from that list is a no, and then we have a few additional ones that we've added to that. So the list has at least gotten skinnier, so it's now under 20 countries total, but OFAC plus some, plus a few others.
Fantastic. All right, and do you pull credit? I'm assuming you do, right?
On the foreign national, yes, we're going to go through we're asking the broker or loan officer to go ahead and pull credit and provide that in the file. And we give them specific directions on how to do that. What's also really nice about what Sprout has to offer is that every Wednesday we have a session called Webinar Wednesday. It starts at 9 a.m. Pacific. Each week we focus on a specific segment of our product offering. So one week we'll do bank statements, the next week we'll do foreign nationals. So if any of the folks on the line are interested in learning more, you're welcome to join any Wednesday, 9 a.m. Pacific time. It's like 30 minutes, 40 minutes at the most.
12 o'clock.
Can brokers come and bring scenarios and run scenarios through those webinars?
Yes. Mm-hmm. It's run similar to this. So yeah, we encourage the scenarios.
Wonderful, wonderful. One of the things I always love about this is there's the scenarios when you're asking questions like this, people are thinking of things that they weren't originally thinking about. They're getting ideas and inspiration by others, as one of the things that we've always found with the dynamic of this kind of format. Do you pull credit for U.S. citizen loans?
Yes, definitely. It's credit-based lending. So for U.S. persons, you're in charge of pulling credit on your end and then providing us with your credit credentials so that we can reissue the credit in Sprout's name, but off of your original credit pool. This way, it will prevent us from having to, double pull, which could then, depending on the timeline, could, have an adverse effect on that borrower. So we will honor your credit report if you provide us the proper credit credentials. And we review all of that as when you get approved with us and get set up.
Fantastic. All right, and last call in 3, 2, 1. All right, I think we got it. I think this is great. Some great information. Really, really glad actually we had the chance to kind of connect with you guys, dig into some of Sprout's innovative products here. You guys have from day one since non-QM started coming to the marketplace, product innovation was just like first and center with you guys, and I'm glad to see that continues to happen. So. Leslie, Sam, thank you guys so much for joining us today.
Thank you. We appreciate the time. Thank you, everyone, for your questions.
Thanks for all your time and all your great questions. And we'll be contacting those who we recognize their questions. And again, we'll be drawing a winner for the Amazon gift card. Thank you.
Wonderful. And again, thank you so much for joining us for another NMP webinar. We love actually, having the opportunity to meet with you, talk about actually non-QM, talk about, some of the great programs out there, the great lenders that are out there, giving you a chance to kind of, make sure that you're offering a full product suite, especially as we go into a year of uncertainty. Who knows what's going to happen? We're going to continue to have these insane great rates. Are we going to have to start to be a little more creative and a little more aggressive with, possibly, focusing on I guess the not so low hanging fruit that's already out there coming in our face today. So thank you guys so much for joining us, and everyone stay safe out there.
Thank you. Bye.
Thank you.